biggest problem there exists in this space, from Mt. Gox to the failure of like FTX to the Bybit multi-sig hack and loss of billions of dollars.
Hi, everyone, and welcome back to Beyond Founders. Today, we're at Token 2049 once again, and we're meeting Chandra from Portal to Bitcoin.
So I was in an MD and PhD program. Before I finished that, I actually got entrepreneurial bug and started a medical technology startup and then an AI personalized nutritional coach startup. What is decentralized? It's a vague term. And when you start with vague terms that have poor definitions, you can hide a lot of technical security vulnerabilities into existence and how it gets distributed. And there's lots of problems with central banks over the years, and we don't have true stateless sound money. And that's the problem Bitcoin was trying to solve. It wasn't trying to solve the transaction problem. It wasn't trying to solve the lack of Venmo or PayPal or Stripe problem. It was actually trying to solve the stateless money problem.
Hi, everyone, and welcome back to Beyond Founders. Today, we're at Token 2049 once again, and we're meeting Chandra from Portal to Bitcoin. Chandra, it's a pleasure having you here. So thank you for making the time.
Pleasure to be here, and thank you for having me.
Of course, I'm really, really happy to talk about your project. I think that there were many things that people don't know about, like protocols and like companies and founders behind them. So we're gonna go ahead and dive a bit into your story. So Chandra, you were a medical doctor before getting into crypto. What drove you down the rabbit hole, and what is keeping you there?
Great question. So I didn't directly jump from medicine into crypto. I was actually always wanted to be an entrepreneur, software. So I was in an MD and PhD program, and before I finished that, I actually got entrepreneurial bugged, and I moved to the San Francisco Bay Area, Silicon Valley, and started a medical technology startup, and then an AI personalized nutritional coach startup. And after that exit, looking to do something as a side hobby. I was actually from libertarian philosophical principles, was interested in Bitcoin right from the beginning, and mined, when it was mineable using a GPU or CPU on your laptop. Never thought I would do anything like a business related to Bitcoin, but it was of personal philosophical interest. And in 2017, during the Ethereum ICO boom time, uh, we exited our previous company. We still had our co-working space, and my co-founder says, you got to look into this Ethereum thing. And it's like, okay. And instead of going deep down the rabbit hole of ICOs, I actually went back and relearned Bitcoin and all the changes that have happened since I first mined. And didn't think I was gonna build anything in the space, but we found that biggest problem there exists in this space has been the same problem that existed right from the beginning, from Mt. Gox to the failure of like FTX to the Bybit multi-sig hack and loss of billions of dollars. The problem remains the same. It is custody and counterparty risk. And so if you think of Bitcoin as stateless money that nobody else can arbitrarily control, and you can completely custody your own coins with just a private key or a muffin sake, you, for the purpose of cross-chain transactions, you actually have to lose your custody, and that evolves through phases. And the phases, we generally describe them as from 2010 to 2019 was off-chain escrow, right? Like centralized exchanges can be described as off-chain escrow agents. So they custody your coins, you send them. So it's three steps. You send them your coin, I send them my coins, and we can both exchange, because exchange is essentially changing the entries in their centralized database. They just show you what it is. And after you're done, you say, give me back my coins. And I say, give me back my coins. And that part is where it falls apart. And then in 2019, we invented this transmogrified alternative called bridges. which obviously failed and lost people billions of dollars, and wrapped derivatives, which regularly unpegs. And there's multi-sig alternatives to cross-chain. There's, cross-chain message passing protocols. None of those work for actually what you want to achieve, which is true trust minimized cross-chain operations. And so, what is the alternative? And that's why we decided to build Portal to Bitcoin.
Okay, well, that's great. That's very insightful. So, talking about chain as part of the landscape and some other solutions, what do you think about cross-chain solutions that also claim to be trustless, claim to be really custodial, and they cut corners like in order like to achieve this? Really?
Yeah, they actually don't claim that they're completely trust minimized. What they claim is they hide under the label of decentralized. And that's very dangerous because what is decentralized? It's a vague term. And when you start with vague terms that have poor definitions, you can hide a lot of technical jargon, security vulnerabilities, um, architectural flaws under the broad label of decentralized. So, what is decentralized? It is a meaningless term. So, when we started, we actually wanted to build what is called a TMAX or a DEX. It's trust minimized exchange. Um, and we stuck to those guns. And now our mission has changed slightly with the evolution of technology space, which is to build the best exchange in the world, period. And it's the best because it is the only truly trust minimized cross chain exchange. It has a team of AI investment agents that can actually help you become a better investor or trader. And it is also future proof in the sense that once the opcode for hashed signatures gets implemented in Bitcoin, we already have it ready on day one. So you're going to be quantum secure and this is a contentious topic where, whether you believe quantum computing is going to break like symmetry of cryptography and a lot of other things are not. And so it is absolutely the best exchange. And so why? There's three reasons why. And it is on par with any centralized exchange in our user interface in terms of speed, uh, the transaction fees, as well as the user experience in general.
Yeah. So you would say that UX drives adoption.
100%, among other things. So that's a broad question. So, given my product development background, I would say what drives adoption is solving uh, top one to just top one or two priority need, which is urgent for a set of users that can't live without it. That's your bridge into the market. And then you expand broadly. Generally, all products follow that same adoption curve. And so user experience has to be on par or better than a lot of or at least if it depends on what your unique value proposition is. If your unique value proposition is better design, that's kind of weak because easily replicated. If you have a strong technical edge, you still have to have on par or better user experience. And that drives adoption because the users, a lot of them don't really care about what's happening under the hood because this industry is filled with noise. Everybody makes all sorts of crazy claims, many of them outright lies. And so having a technical differentiation is not enough. You also have to compete on the level of what user actually touches and feels, which is the UX.
Right. Well, really, really insightful. So, I'm wondering, we're talking about elevating humanity through technology. So, when we're talking about peer-to-peer markets and Bitcoin, how do this help us? And what do you see like moving forwards?
That's a great question. So markets are essential for development, right? Like when you think about the civilization stack, what drives us forward? You have to have property rights. You have to have uh, freedom, economic freedom, which is free markets. Peer-to-peer markets is part of that. Funny enough, you mentioned peer-to-peer because it's becoming my paper cites a peer-to-peer electronic cash system, right? So why do you need peer-to-peer electronic cash? Cash is actually peer-to-peer. I tried that in cash, right? The only problem is someone actually controls the printer and how it actually gets uh, comes into existence and how it gets distributed. And there's lots of problems with central banks over the years, and we don't have true stateless sound money. And that's the problem Bitcoin was trying to solve. It wasn't trying to solve the transaction problem. It wasn't trying to solve the lack of Venmo or PayPal or Stripe problem. It was actually trying to solve the stateless money problem. And so when you bring economic freedom through global seamlessness, which is completely peer-to-peer and borderless, permissionless, censorship-resistant money, you obviously increase wealth and prosperity, and increased wealth and prosperity leads to progress for humanity. And so technology is the best lever we have right now. And there's two things that matter in this world that we live in today. One is obviously getting a sound monitor to a sound monetary system. Bitcoin is a tool for that. And the other one is actually intelligence, the distribution of intelligence and embedding intelligence into every facet of our lives is going to elevate our living standards, create enormous amounts of wealth, and completely restructure society in a way that kind of sounds scary, but eventually it's going to end well for everyone.
That's really interesting. So one of the things that I wanted to touch upon as well is that in a multi-chain VC fueled world, what does it mean to be a true Bitcoiner, like building from a principles first approach? That would be very interesting.
Um, sure. So in a VC field world, so this will be a little bit controversial, but that's okay. Um, why are VCs in cryptocurrency if markets, and why are they investing in cryptocurrency projects? I mean, if you go to traditional VC, as I have spent a decade of my time with in traditional startups, um, if you want to raise a seed round, the first thing a seed investor, a good seed investor, or a micro VC would look for is at the pieces, right? Like the person is this founder. Does this founder have founder market fit, or founder medium, or founder need fit? And then they give you the seed money after you develop the product. When you go and ask for Series A money, they will look at, do you have the signal that indicates that you have product market fit, and how do you define that? Each VC firm defines it a different way, and then they look at, can the founder actually adopt and be flexible enough to get to product market fit? What are the financial metrics? When do you get to profitability? How do you get distribution? How do you get customers? All of that stuff. No crypto VC does this, because none of this, most of these projects are just plain nonsense, and some of them are actually theoretically impossible. And so when someone tells you that we're going to decentralize AWS, you have to laugh, because if you ever had the privilege of visiting one of these data centers, everything is optimized to the nth degree, from the way they lay their architecture to the way they run their power cables in the walls, to the cooling systems, to how they actually, architect how these GPUs actually are placed in servers, the power supply, the internet connection, the memory between these compute devices. Everything is optimized to the nth degree, because it's a hyper competitive space. These hyperscalers that we're talking about, AWS, Meta is the Microsoft, the Apples of the world. And now you're going to tell me that you have decentralized physical infrastructure, which means that my iPhone in Hong Kong and your Android phone in somewhere else, and somebody else's extra laptop in the US, they're all going to communicate and become coherent and actually compete on the efficiency of compute with these hyperscalers that we have in the world. That's a joke. But VCs invest because they think the retail investors are going to believe this narrative, and so they can dump it. And that's typically how it works. So for us, I'm interested in building real businesses with real value. I don't care about like pump and dump schemes. So what is a real business? Exchanges have been the real businesses that produce billions and billions of dollars. It's a proven demand. They have huge problems. And if you solve that problem, you instantly become at parity. So for us, never letting go of the principles of Bitcoin, which is true self-custody, trust minimization, and then actually becoming the adapter layer for other chains on blockchains to actually come back into Bitcoin or money to be transferred across, uh, makes Bitcoin actually the settlement layer for millions of markets. So Bitcoin block space now becomes the settlement layer for millions of markets instead of just BTC move rate. And that's important for us because in the long run, after the Bitcoin inflation goes to zero or terminally declines to a point at which having doesn't matter anymore, uh, what's going to fund the security of Bitcoin network, right? It's either inflation, which is a block subsidy that is a temporary thing, or you have to increase the economic density of the transactions that are being settled on the blockchain. So the miners charge much higher fee for byte data that's being sent in there, and so making it a settlement layer for millions of markets is obviously a good solution. You're increasing the economic density of the block space, which is limited by design. And so that's important to us. If you're able to find a product market fit and actually build a profitable and great product that is self-sustainable, that's wonderful. So that's the difference between us and most of the CFO, multi-chain. Wow.
That is amazing, and I love how much you're unpacking. Like in a single sitting, I feel like we're gonna need more time actually. So like next series that are gonna be coming up. Chandra, thank you for joining us today, and yeah, wishing you the best. Like for Portal to Bitcoin, we'll be chatting very soon.
Thank you very.
Thank you for joining.
Absolutely, my pleasure.